And then we are done. And then we have Heidi do the math for us, and we're totally done. Questions, comments, concerns, random thoughts?
So we don't figure out a per unit, like on the variable, the fixed overhead?
No, we do not. We just take the whole amount, put it in. Which is why it's easier, and which is why we're doing this one first. Confusing? But for the variable cost and income statement format, we just take the whole number and put it there. So it's easier. It's easier. Because it doesn't go into inventory, so we don't have to calculate that per unit cost stuff. You just kind of put the big number there and call it done. What? Question? Joe? She kind of looks like she has a question, or a comment, or a random thought at least.
Because usually when they do something like that and it makes it easier, I make it harder.
Well, please don't. Please don't, if you would. Just, yeah. I work very hard at trying to make this stuff just as easy as possible. It's just accounting, right? It's not rocket science. It is not rocket science. It's just accounting. Addition, subtraction, multiplication, division. Pretty simple stuff.
I have an additional comment regarding the...
A comment? A random comment or a constructive comment?
About the fixed overhead.
Okay.
On the table here in the book, it has nothing written for fixed overhead per unit. So how would we calculate that?
You don't have to. That's kind of the point. You don't have to.
Oh, I'm sorry. I was looking, never mind. I had them backwards in my head.
That's okay. You're okay. And what was your question? You had your hand up. And then we'll get to you, Tyson.
The fixed overhead's just there, but is it the same thing like with variable per unit for the selling and administrative? You had to calculate it, but the other one that you just don't have to?
Say maybe another sentence or two, because I'm not getting you quite perfectly.
Fixed per year.
Fixed per unit?
10,000. We don't have to take it times unit sold.
Correct. And that'll be the same for both. That'll be the same for both income statement formats. Okay. Was that your question?
Yeah.
Okay. Tyson.
So when we're doing the absorption cost method, I don't mean to jump ahead or anything.
Well, we're just about ready to jump ahead anyway, so that's okay.
Okay. Well, are you going to be using the 6,000 or the units produced in that one?
We will, because Rebecca, to calculate that $25,000, Rebecca used that $6,000. See the $25,000 that I have on the board?
Right.
Rebecca, that by $5 per unit, that $5 per unit was calculated using, units produced or units sold?
Units produced.
Units produced, and so that is when we use it.
So even on direct materials, we'd say the cost of...
No, just for fixed overhead, just for fixed overhead. Does that make sense, or did I just confuse you?
How'd she get the fixed overhead?
Well, let's make that clear. Okay, let's make that clear.
She used the units produced or the units sold, did you say?
Both, actually.
I guess I just don't see how that is using the units produced, because wouldn't it just be the fixed overhead, which is the $5?
How is that $5 calculated? You're right. What goes on the income statement, that $25,000 is your $5 times the units sold. That's an exact, correct calculation, and will always be that way. But how is the $5 calculated?
The 30,000 divided by the total units?
Units produced. There we are. So did we use both to ultimately calculate that $25,000? Yes, because we used total fixed cost divided by units produced to calculate cost per unit, and then cost per unit times the units sold to arrive at a number that appears on the income statement.
So that you can recognize your cost with your revenue.
Yeah, so you can match. Yes, ma'am.
So you're using, okay, you may have just said this, the total cost by produced, because they're both a total, that way you can find the actual.
Cost per unit. Fixed, in this case specifically, fixed overhead per unit. And then we multiply fixed overhead per unit times the units sold to arrive at The number on the income statement.
Because it's a food station,
Yes.
you wanna use
Yes.
that.
But we use the quantity produced to arrive at the cost per unit.
So are the direct materials and direct labor the same?
Yes, every other number on the board is going to be the same.
Every other one besides that?
Yep. Because what is a difference in operating income attributable? It's only attributable to fixed overhead. So, and the difference in how fixed overhead is treated. So every other number is the same. So revenue is the same. $100,000, direct materials the same. $10,000, direct labor's the same. $20,000, variable overhead's the same. $5,000, gross margin's going to be different. Whitney, can you do that in your head?
Yes, 60.
Huh? 60?
No, 40, sorry. I just added.
You just added it. Adds up to 60, so therefore gross margin's 40,000.
I was expecting it to be second half, but
It's okay.
I expected too much, sorry. Yeah, zing.
And to think, I said awesome possum last time. Apparently that didn't get me much. Now what? These are also the same, 15,000. I heard that yawn. Alex, was that you?
That was a sigh.
That was a sigh?
Yeah.
What are you sighing about? Is this too much fun for you? Not enough fun for you? Underwhelming, overwhelming? No, oh, come on. Then we have to make our own fun. Doesn't it give you a feeling of accomplishment, learning something? You're not accomplishing? You are. You are. Brandon, you got this calculated?
Yeah, I was just looking, so you took the salary administrative,
Uh-huh. It's the same number,
okay, so
both
both sides.
sides.
So then that adds up to 25,000, subtract that from the first one,
Yes,
15,000.
thank you, sir. Did you use a calculator? Awesome possum. And I put a star by the number that's the hard one to calculate. It's the one. Now, don't let him distract you. Are you distracting him?
No,
Is he distracting you?
no.
Shame on you. Now, let's check out to see if we did this right. Because see that formula on the right? What's it say, Chance, that formula that's on the right side of the board?
Change in inventory times fixed overhead per unit equals difference in operating income.
Okay, let's see if that works out. Jackie? Pick out one of those. Let's do the two numbers on the left side of the equal sign. Change in inventory or fixed overhead per unit. Which one of those would you like to give me?
The change in inventory.
Change in inventory is how many? 1,000. 1,000.